And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. Trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. Today, and as always, we're going to be looking for accurate context. There it is. Today is Friday, December the 10th, 15 days to Christmas. As always, thanks for trusting me with your time. We're going to be looking at these markets, trying to find good, consistent context, good risk management, and of course, patience. Economic numbers this morning, 7:30, the CPI numbers came out. The core numbers came out as expected. Core of November came out 0.1% higher. Markets seem to like it. So far, so good. Knee-jerking to the upside in gold, our equities. We can see what else we've got going on here as well. We are still waiting for the 9 o'clock consumer sentiment, the Michigan consumer sentiment, and that's going to be it for the week. Things that are on traders' minds, U.S. stocks were trading higher prior to CPI and continuing that move to the upside. Crude prices find range after early rally this week. So it looks like they're going to be finishing the week on the upside. Some tensions, increasing tensions between Russia and the Ukraine rise as the ceasefire talks fell apart yesterday. So it's looking, more and more tense as far as that situation, I guess, is over there. There's some probably not good news. It is rollover. We've moved our charts in the equities and the currencies from December to March. I'm liking the fact that we're looking at March contracts because that tells me it's going to be only about 3 months before the weather starts getting a little bit warmer here. As always, make sure you like, share, comment, question, feedback, and heckling are always welcome. Taking a brief look at the VIX this morning, down about 4% as our equities continue to the push to the upside. 2071 last I checked. Dollar index up slightly, 96.41, and the 10-year yield about flat, 1.49%. If you're in the markets already, hopefully things are going your way. We do see some movement here prior to the open. We're going to check those charts very shortly here, but I always want to say good morning to everyone. Good morning, Jim, from Glenwood Springs, Colorado. Snowy Glenwood Springs. We don't have any snow on the ground here, but I'm sure it's heading our way. Frederico, Chris, I heard something good about you yesterday, and I see you're talking about it today. Lacey, Chris says good morning. Jeff Mullins, good morning. Day 1 of step 2. Nice job, Jeff. Moving forward. Just keep following your process. You'll get to the funded account as Chris has passed step 2 yesterday, ready for the pro account. Nice job, Chris. We're always happy to see success. Jeff, Charles Shaw, good morning. Yes, dead letter opener. Good morning, Janus. Jerry is awake. Brian, Jamie, good morning. Zarain, Jerry is awake. Look at that spike. Yeah. Terry King, Vince, good morning. Jamie, incredible, nice data and regaining after the loss from yesterday. Always a good thing, right? Joshua, Nico, Dr. VJ. Yeah, Charles, with the rollover to the March contract today, what happens to the previous levels marked on the charts, such as weekly kickoff levels and previous unchecked points of control? I got to go and adjust all the previous unchecked points of control because there's usually a discount or a premium to the coming month. Now I've marked the amount of the premium or discount that I've moved all those, and basically I'm just taking those weekly kickoff levels and putting them where they belong in the March contract. It's a really good question, Charles. I don't think we're getting an echo, Ron. But the unchecked points of control, those take some time. So I've moved some of them. I've got to go back on some other charts and kind of remove them as the day goes on. I'll get that done so we know what we're looking at. But I've moved everything that I think is reachable today. 5.5 between December to March in the ES. I've got that information right here. I'm looking at approximately a 7-point discount, using just where the last price is in both and doing the math. I've got about a 7-point discount. John Peters, good morning. Does Top Step do one-to-one coaching? John, we do. It's usually going to be with me. I have not been taking on new family members, if you will, through the end of the year, and I'm looking to probably open up a few spots in January or February. So, keep an eye out. And I'll probably, announce that on the market forecast. If you're here on a daily basis, we'll let you know when that becomes available again. Dead letter opener. Cook's made a cold broth. Good morning, Dante, Mirik, Sarah. Good to see you, Mo, Tova, Manuel, Dina. Sound good here. All right, good. Ron Kim, sorry. Had you open in 2 browsers. That's okay. It happens. That means I get another watch. All right. Yes, of course, Charles. All right, John Peters. Good morning. Yes, one-on-one coaching. Currently full. Gonna open up a few spots again after the first of the year. Don't forget that group coaching is available on Mondays and Wednesdays at 1 p.m. Usually I'm going to be putting the link in so that you can sign up for it. I'm going to put that link in now. Of course, there's no group coaching today, but we do that every Monday and Wednesday, 1 p.m. Central. So you can go ahead and sign up for it now if you'd like. And if you're really interested in one-on-one coaching again after the first of the year, we can have that conversation. April, my pleasure. Isaac, good morning. Rob T, good morning. Yesterday we had the question and answer session with Dan and Michael. Hopefully you were able to attend that, and if you hopefully got your questions answered. They have limited time to do that, so if you didn't get it, you'll catch them next time. Sure, they'll be doing it back in 2022 in January again. Dead letter opener. With rollover and crude, should we go with volume or open interest numbers? Whenever we're in rollover, and it's one of the things about the energy markets, is they roll over every month. I find that during that week of rollover, or maybe a week and a half, it's difficult to be able to lean on that volume and open interest information because there's so many contracts moving from the front month to future months, and some people are using the spread to do so it doesn't really change open interest. Some folks are legging, so they're getting out of one side and getting into the other, or vice versa. If you see the open interest in S&Ps, there's an additional 100,000 in open interest. It's not that there was that many new positions coming in. It's a function of rollover. So whenever the markets are in rollover, the volume and open interest becomes a little bit blurry. It's a great question, dead letter opener. I can lean on them less. I have to lean on them less because it's not as clear. It's not as trustworthy. It's a great question. All right. And one last thing before we get to the charts. We put a market therapy on our YouTube channel. It was just me and the good doctor this time. We didn't have time to get anything set up so that we could have you come in and ask questions. But it's just a kind of review of what we did last year and a little bit of a look at what we might be doing forward. There's a lot of guilting about doing your journaling. Everybody says they journal, but actually, do they? All right. So we're going to start with the S&Ps today so we can go to the crude oil when it opens. But we're getting a Okay, sorry about that. I didn't turn on the mic for the charts, and thank you for letting me know. So here is the daily in the S&Ps. March, it's a 7-point discount. 7-point discount between the December contract and the March contract. So I've adjusted all my levels accordingly. It is still rollover. We can't forget that. 3 days in range, in balance. We're going to be using balance rules here, which means that at the extremes, we're going to be looking for our opportunities. We just take a look up at the upper extreme of this area of balance. If we're going to be looking for reversion trades, we're looking to sell up against the high end of this range. We're always thinking about risk management. Always thinking about risk management. Risk management, risk management. Be patient. Don't forsake trade location for momentum. If we're going to see momentum, we're going to have to break out of this 3-day range and see the market continue higher or continue lower. It's not likely in rollover. And again, remember, it is Friday. We've had a pretty decent up move here. Not really expecting any long liquidation or profit taking because, again, we are in rollover. So a 100,000 contract boost in open interest yesterday does not mean that a whole bunch of new sellers came into this market. It is a function of rollover. I think the sites after this week are, of course, going to be focused on the FOMC meeting next Wednesday. Lots of posturing and hedging going on between now and then. Let's look at the 30-minute chart. So a little bit of a change here. We were looking at opening in range and in value. We're holding some overnight longs, and those overnight longs just got a lot longer on this move to the upside. This is a previous point of control that has been adjusted right to it. So we've got some visuals, a couple of visuals to target to the upside in relatively close proximity. Overnight longs, it looks like we're going to be opening with a gap. This is a new event, and if we open with this gap and we can't close this gap, we're going to continue to perhaps look for opportunities to look for longs. Now, this knee-jerk reaction is a reaction to the numbers that just came out, and how much are we going to be able to depend on that? Just the fact that we've moved out of balance from yesterday is a degree of a break of the area of balance that we are currently in. I'm looking at the overnight high from night before last, the high from the day before that. This whole area up here is ripe for perhaps finding fish. Let's look at crude oil real quick on the daily. So we've had, again, another decent move up here. We're somewhat range bound. We're not near the upper extreme of the range. We lost 3,300 in open interest yesterday. Perhaps some of the longs from the move to the upside took some of those off yesterday. We know it's coming into rollover. So looking like we're in short time frame control. Here's the 30-minute. We've opened with a gap, and I'm going to probably say that our opening range is the low of the session so far. Here it is. Here's that first minute. The opening range is the low of the session. We've opened with a gap. We're holding some overnight longs here, so remember that. And where are we as far as the upper extreme of balance? Well, we're pretty far away from it. So again, with the opening range at the low of the session, this offers the opportunity to look for a long and to be able to limit risk. If the market continues to move higher, the upper extreme of balance here, which is pretty close to last week's high, would be an excellent exit and another opportunity for us to look for an execution. So opening range, the low of the session so far. We may come back and take a look and see how this is playing out, but we're not seeing much confidence to the upside here. That's a little bit disturbing. But with the opening range, let's see here. Well, it's kind of large. It's 15 ticks. 15 ticks of risk, 20 ticks probably of risk. Gotta make that decision as to how risk averse are you. Looks like we're just going to take it out. There we go. Any of the longs that just took this trade to the upside just got their stops hit. But again, it is a measure of risk management. Now it looks like we may come down and close the gap, which we just did, which offers another opportunity. Let's take a look at the Nasdaq now. Okay, so the Nasdaq is a little bit different than the S&Ps. It has been presenting as a weaker market. We added well, let's go to the daily here. March 3-point premium in March to the December contract. A little bit different there, but the market has been struggling, more than the S&Ps. S&Ps are relatively close to their all-time high. We haven't been able to do that here in the Nasdaq. Open interest is a function of rollover. We added 9,000 approximate in new open interest. Again, probably a function of rollover. We got to remember that it's not as clear when there is no rollover is the information from the open interest. So this market is still struggling to catch up. We had a 3-day balance that we're in the S&Ps. We got a little bit of a slide to the downside here yesterday. Take a look at the 30-minute chart. So we were holding overnight longs. Settlement is down here at 16,151.50. So holding overnight longs, then the news came out and brought us right back into value. We're probably looking like a gap in the S&Ps. Nasdaq has only brought us back inside value. It's a very kind of a toothy profile from yesterday. We're opening inside value tells me that we may need to wait and find better trade locations as the day goes on, because there is, some potential repair that the market might just take care of today. So I'm going to be trying to, again, stay patient. Overnight, the value area low was resistant, and the news has changed that. Right back to point of control. Settlements all the way down here. We know we've got some longs here. Try and stay patient in the equities markets today, especially the Nasdaq market, because it's right dead center in the center of value yesterday. Very little change in the perception of value. Of course, that may change as the day goes on. I'm looking for short time frame levels and areas of extreme in the area of balance for opportunities. Nothing right here in the middle. Seems comfortable. Everybody likes the gooey center of the Oreo, but it's the cookie on either side that I'm more interested in. Gold had a pretty good upside spike, but still, what is this, 8 days now we've been stuck in this area of balance, and the market gave us the opportunity to look for a potential opportunity for a sale up at the upper edge, if you will, of the area of balance. Yesterday, we added 1,400 in open interest. Now there's a little bit of an upside trend in open interest where for a couple of days there was just no interest in this market. Some interest may be coming back, seems to be bringing some blood back into the muscles here, and we may see some opportunities when something changes. But I'm still kind of backburnered on gold. Yesterday, I think I said gold was dead, and it certainly seemed that way. I don't think there was a lot of great opportunity in the markets yesterday, although things changed throughout the session. Let's take a quick look at the 30-minute chart. Well, our overnight shorts have certainly got it run through them. This nice spike to the upside, of course, was news-driven, very difficult to try and catch. Initially, the opening range was left at the high of the session, but when that news came out, that quickly changed, and we've driven the market back up to pretty close to our upper area of balance here. This has not been rechecked. I'm going to keep that. We have not checked this naked point of control until now. So I'll shorten that up, and we'll just know that this point of control has now been checked in regular trading hours. But when we kind of compress this, this is the area of balance that I'm interested in finding opportunity, if we even get the chance. I was really hoping that we were going to have an opportunity for an execution down at weekly kickoff low, because it's been put through, it held yesterday, held in the overnight. So looking for another opportunity for that. But of course, I don't get to choose that. So we're going to have to deal with this and trade what we see. The market was, holding overnight shorts, and pow. All right, let's move on to the euro, the 10-year, and finally the nat gas. So 26-point premium March to Dece. This bull flag, which I haven't changed these lines yet, obviously. This bull flag, instead of becoming directional to the upside, seems content to start to create balance. The dollar not really moving all that much. It seems to make sense. So we've had a pretty decent downside move here. I'm going to put this over here, and we're going to get a closer look at this trend line here on the 30-minute chart. So let's see where we're at. I'm just going to move this. Okay, we still got our points of contact, and we've had the opportunity to come down here and perhaps get relatively close to an opportunity to see if this is going to be supportive. Haven't been able to get there just yet. And I'll bring this up. Get our points of contact. So overnight shorts give way when the numbers come out to back into range and now back into value. Overnight inventory has been adjusted, looking at the situation where our breakout of the bull flag is more creating balance. This point of control looks like an interesting opportunity for us. Again, if given the chance, I'm going to suggest again, we got to stay patient today. The markets are trading in areas of comfort, not areas of discomfort. Remember, the market is going to go to where it brings the most pain, and it's not there yet. I got to stay patient. I got to wait and see if we get opportunities at some of these extremes. All right. Here's the 10-year, 3 days, 4 days perhaps of balance in a longer time frame, medium time frame balance in a longer time frame area of balance and centrally located. We are short time frame controlled here, ladies and gentlemen. Open interest has largely been moot all week. There's not a lot of energy coming into this market, and we just got to bide our time and look for smaller opportunities. In all of these range-bound days, these short time frame controlled days, the bigger opportunities aren't there. Keep your expectations reasonable with profit targets today. You get some decent profits. You get 2 to 1. You get 3 to 1. As long as we stay range bound, you got to take profits on those and then look and be patient waiting for your next opportunity. Here's the 30-minute chart. Overnight inventory was short. That is now reconciled. We're back to settlement, which is 130, 12.5 ticks. Back in range, back in value. Patience. You got an opportunity perhaps here. You know, this trend line was supportive. Now it's resistant. We've taken a good stab at it here. Might be an interesting level for us if we can limit our risk. It all depends on your risk appetite. Let's take a look at the natural gas. I'm looking at natural gas. Now, it's 2 weeks from rollover in the nat gas. 2 weeks. We had our weekend gap. We've had 5 days with which to digest price at lower levels. How good of a job is it doing at these lower levels? We see volume cutting off, and we're still 2 weeks from rollover. So I'm not that concerned that this is a rollover fall off in volume in a huge way. And we lost 18,000 in open interest yesterday. So there's not a whole lot of new business coming in down here. I'm going to be really fascinated to see where this market opens on Monday. If we do stay range bound here and we open with a gap higher, another weekend gap higher on Monday, it's going to create an island low. And we all know that these island lows can be powerful reversal signals. What does that mean for us today? Well, here's the 30-minute chart. Overnight longs, are they reconciled here? We've had a pretty decent move and then a move back away. I'd say we're still probably a little bit long. The upper extreme, obvious. Very, very exact between yesterday's high and the day before's high. It's not necessarily strong. Some would say that's a double top, but it also says that the market is still willing to take that move back up to that level, and there's no sign of excess at those highs. We have a little sign of excess down here. We have a little sign of excess down here. No sign of excess on this low, but we're showing still completed downside auctions. And this is a longer time frame, almost saying that the upside auction is not over. What do you think? Nobody knows for sure. We're trading what we see. Norman, I think you have to consider weather patterns when trading natural gas. I mean, we're coming into the northern hemisphere when it's in high demand, and as we're all aware, the question is, Where's the supply
Where's the
coming
supply
from,
coming from,
especially in Europe?
They're having
a real hard
time,
time,
and it's kind of a
that,
surprise that
I think it is a little bit of a surprise that price has been
moving
lower
here in the U.S. for the
last
month or so. As we come into more demand,
are we seeing
more supply?
So
there's
if we're not
seeing more supply, there's a powder keg here.
Sorry, got rid of the echo. So yeah, dead letter opener noticing some poor highs on the CLTPO also. Great vision. The echo should be gone now. I apologize about that. I'm going to be getting some new equipment that's going to be able to take care of that. I clicked the echo button. Yes. Ladies and gentlemen,
please welcome
Led Zeppelin. All right. It's Friday. The rumor in the S&P pit is if you're still in the pit at 2:00 on Friday, you're chasing money. You're down. Let's finish the week strong. I'm going to try and make a little bit of money and then wrap up my trading for the week. Have a great weekend. I know there's a lot of shopping and things to do, and it's busy holiday season. Don't forget, be good to yourselves, be good to your loved ones, be good to each other, and pray for all of us. Trade well today. I'll see you in the pit in about 10 minutes. Get out there and profit. Have a wonderful weekend. I'll see you Monday morning again on the market forecast. Until then, have a great trading day and a great weekend. You guys, anybody remember Laughter? Hope they play Stairway. Have you seen The Bridge? Get to the golf course for a lunch. There you go.